All right, let's jump right into this explainer. Quick reminder up front, this is strictly for educational purposes only. Investing involves risk of loss, and this is absolutely not financial advice. The United States is accidentally bankrupting its own farmers, and today I will show you the exact data proving Wall Street is betting against your food supply. You think the trade war is about microchips? The truth is, Washington's refinery sanctions just triggered a 49% spike in fertilizer costs that will mathematically collapse American agriculture. Stick around until the very end because I am going to reveal the exact physical energy trump card China is holding to starve U.S. tech. Section 1. The ground truth. Supply chain collapse. Let's aggressively pivot to the mechanics of this crisis, specifically the terrifying reality of the nitrogen supply chain shock. To translate this into fifth-grade terms, it's like trying to bake a cake, but the price of flour just jumped 50% overnight. Therefore, you are trapped. You either double the price of the cake and no one buys it, or you take a massive business-ending loss. That is exactly what is happening to our agricultural baseline right now. Here's the ground truth. Sanctioning Chinese teapot refineries has completely shattered Middle Eastern fertilizer shipments. Recent strikes on natural gas facilities and export terminals broke the primary feedstock for ammonia production. But natural gas is the absolute core energy input for sulfur-based phosphate. Look at the raw data. The Strait of Hormuz blockade mathematically cut off roughly 44% of global seaborne sulfur and 43% of global urea. At the exact same time, up to a third of global nitrogen exports are disrupted. But because conventional agriculture requires these exact inputs, global producers are aggressively curtailing output. Therefore, we are looking at a scenario leaving 70% of U.S. farmers completely unable to afford their inputs. The underlying math just doesn't work anymore. Section 2. Informational asymmetry, the stealth pivot. There is a massive informational asymmetry happening right now. Public markets blindly view these sanctions as a political victory, but institutional dark pools, they look at the disrupted supply chains and know it guarantees sticky, crippling food inflation. They see the supply shock and they trade the reality. Therefore, elite allocators are executing a stealth pivot. They are actively shorting the agriculture sector. Meanwhile, China is simultaneously banning U.S. capital from its private AI ecosystem, cementing a dual threat against the U.S. economy. This perfectly executes the CCP's dual circulation strategy. They are making China structurally independent from global inputs, while simultaneously making the rest of the world entirely dependent on China's outputs. But the ultimate goal is a vice trap. They are forcing America to furnish China with the most exquisite and advanced technologies, like frontier AI models, while the CCP strictly controls the licenses for basic commodities and capital. Section 3. The macro impact. Physical AI supercycle. We have to connect this agricultural sabotage directly to the broader physical AI supercycle. China's commanding advantage in electricity infrastructure gives them a massive structural edge over the West. We're talking limitless free energy potential and fully powered empty data centers just waiting for inference. Therefore, while the U.S. actively cuts non-defense R&D funding, China is leveraging its purchasing power parity. They are outspending and outbuilding the U.S. in physical infrastructure, deliberately capturing the long-term inference market. But as recent Anthropic testimony confirms, the CCP explicitly knows where it is behind, and it is mobilizing vast national resources to aggressively catch up and surpass us. Section 4. The ultimate payoff. Sovereign demand vacuum. Here is the massive data reveal. This is the terrifying reality of the sovereign demand vacuum. China is actively slashing U.S. soybean imports, dropping orders from nearly 27 million tons down to barely 6 million tons before stepping in with a token last-minute deal. Therefore, when the biggest buyer on Earth walks away right as your fertilizer input costs mathematically explode, the entire U.S. agricultural system fractures. You cannot survive an input cost shock and a demand vacuum simultaneously. This is the sovereign energy trap in full effect. But China isn't starving. They simply weaponized their demand. While they starved the U.S. farmer, they shifted a record 79 million metric tons of soybean purchases straight to Brazil. In a financial system where the government is taxing its own food supply to fight a geopolitical war, what is the actual price of survival? Hit the like button, subscribe to the channel, and drop a comment below with your thoughts on the agriculture crash.